What's up, everyone? Welcome back to the channel. Today, a video a little bit different. Instead of crypto, I'm going to be talking about the SP 500. I'm basically investing into that as a little bit of diversification from just crypto. I personally invest into the S&P 500 quite a bit. I think it is a good diversification tool. I also think it is relatively safe and relatively stable climbing throughout the years as the economy goes up, or if the economy is good, basically, the S&P 500 will perform well as well. Now, obviously, every asset has its highs and lows. The S&P 500 is no different. It also had corrections in the past, but historically, it's always bounced back and gone back up. And if you look at its performance, basically since it started, it's a straight shot up with a few bumps in the road. Is how I look at it. But I wanted to talk a little bit about that. Want to explain a little bit with the chart and basically go a little bit of deeper into this, especially as Bitcoin right now is going down, and there's not a lot of alternatives in crypto. Like, Bitcoin is Bitcoin, and yeah, you can build your own portfolio, but not all of them will perform as well as Bitcoin. That's just the part with risky assets in crypto. But the S&P 500 basically means 500 of the top performing companies in America, and all of them will be working for you if you own a part of that fund or ETF, which basically follows it. But yeah, let's get into the rest of the video. I'll use some examples, and yeah, let's just go through it. And I will add one more thing. If you haven't already, please leave a like and subscribe. You've all been massively doing it so far, so thank you all for that. And yeah, let's keep growing the channel. All right, let's get into the video. All right, so here we are at the S&P 500 index. Basically, little onboarding page that TradingView has. The Standard & Poor's 500 index is a capitalization weighted stock market index measuring performance of the 500 large publicly traded companies in the United States. This index covers a wide range of industries, including technology, healthcare, energy, and finance. Now, these are all sectors which I think will be needed in the future massively and exponentially. So I think in owning part of this basically means you're very well diversified in very well used sectors. So healthcare is something, costs are exploding in it, profits are exploding in it, regardless of what you think of it. But there's more and more money being pumped around in healthcare. Energy as well. I think pretty much every country is trying to meet demands on the increased energy demands of data centers, Bitcoin miners, etc., etc. Finance as well, technology, of course, with AI, the whole AI boom, which I think is only just starting, in all honesty, considering how far AI has gone already and how big the investments are in this area and how much the focus is on it. As I think it's basically like the invention of the steam engine at the time. The industrial age, I think we're reaching the AI age. So basically, owning a part of these sectors means you're very, very well diversified, and you're also primed for a good return. And yeah, it's also a percentage down today, but that I like, in the long run, it doesn't really matter. Now we can look at the chart of the S&P 500 itself. Now, if we look in the daily, you can see basically over the years, it's been steady climb. Like, yeah, it's had its highs and lows, but this is also where the DCA tactic basically saves any low you experience. Obviously, with the Donald Trump era, we saw a lot more volatility for a very short while. I expect that to happen again, by the way. I do expect, with all the Trump and Epstein madness right now, I do expect a bit of a correction. Basically because of real world situations, regardless or how they play out. But Yeah, we're going to be seeing that if that happens in the next couple of weeks. But if we look at this chart, basically, had we bought that little dip, we would have made roughly 40%. And I think a 40% increase on an index funds the size of the S&P 500 is insane returns, by the way. I did buy not as much as I wanted to, but I did buy a little bit, but I also bought a lot of crypto at the time. So I should have, I got to keep a little bit closer to my original tactic, which was try to pump as much money into the S&P 500 as you can. Regardless, I will say, besides that, like, I'm trying to save a lot on crypto, trying to save a lot on stocks, and trying to also invest a lot in the S&P 500. So sometimes you try to grab opportunities as they arise. So I tried to do a little bit more in crypto this time. So I got to shift back to a little bit more S&P 500 is what I think. And especially if we're going into a bear market in crypto, in Bitcoin, which can take quite long, this will still net you returns. Like, even if we have a correction, it will still keep growing alongside it. While Bitcoin can stay below its level for a very long time. Like I said, this is based on real world economics. And as long as the economy is flourishing, this will keep growing. And of course, there were bigger crashes in the past. There were corrections. But basically, as money is generated in an economy, as inflation increase, if profits increase, companies are bound to put more money back into their stocks, back into their company, their market caps grow, this index fund will grow. So basically, as the world produces, this will keep growing. And yes, there's a lot of speculation and a little bit of market manipulation, as there are in all markets. But as this keeps growing, as the world keeps turning, this will keep growing. So yeah, it will not be the returns you see on Bitcoin. You will not see 100% return. But the last couple of years, the S&P did roughly 20% on a yearly, which is still a very, very good return, especially considering it's considered relatively safe, especially compared to crypto, compared to Bitcoin, but especially compared to altcoins. So I think it's very important to keep a very balanced portfolio. And obviously, like I said, these sectors, I think, are going to perform really, really well in the future. So I intend to hold this. Now, I will say this, though. You cannot directly buy the S&P 500, but you can buy an ETF which tracks it. Now, this is one I own personally. By the way, if you want to watch my personal portfolio, or one of them at least, I am a popular investor on eToro. So on eToro, you can watch exactly which stocks I hold, the returns I've made over the last couple of years. One important thing to note is that my portfolio is aimed at a lot of dividend returns as well, which aren't calculated in that total score. So I think right now, like, the first 2 years were roughly 20. This year I'm at 7%. But there's another additional 5 to 7% dividend that is added onto that. So that's cash dividend, which will be used to increase your copy position if you tend to copy it. But yeah, you can check that out if you want. I have a link to eToro down in the description below. You can also buy this on Trading 212. I have a link to that in the description below as well. Only that, I think that expired. You used to be able to get some free stocks, but I think it's expired. So yeah, you can just join that platform if you want. But the best part about both of those platforms is that they offer fractionalized stocks. So if you don't want to move $600 into this, you can basically pour 100, 10, 15, whatever their minimum amount is, you can purchase for that amount into an ETF. Or you can purchase $700. Like, if you want a little bit over one stock, you can purchase a little bit more. So that is a little bit of a difference with crypto as well, whereas usually you buy just a crap ton of coins for a certain amount. Yeah, normally you would have to buy whole stocks, but they've introduced fractionalized stocks current day, so you're able to buy smaller amounts, which I think is a good development. It makes it a little bit easier, a little bit more beginner friendly, especially. Uh, but basically, if you buy this stock, you can see that the price or you, the chart itself pretty much mirrors what happens. And yeah, it tracks that price. It's a little bit cheaper for us to get into. And yeah, you basically net the same returns. Only the difference is that they also offer a 1.14% dividend. So you, by holding these stocks, you get paid 1.14% on your stocks in cash. So you get free money by holding it. And yeah, if you intend to hold stocks or S&P 500 related stocks, I personally hold VOO as well, just because I get that nice little added bonus. Now, initially it won't be a lot, but it can stack up. So yeah, just be aware that this exists. Now, personally, I think the S&P 500 will always continue to do well. And if it crashes down, it's because the economy is down. And if economy goes down, everything will go down. Bitcoin goes down, crypto goes down, stocks go down. Maybe you see some return on gold, like as a hedge against economies, but I intend to hold gold as well. So if I hold a little gold, I hold the S&P 500, I hold crypto, then I've basically covered all my bases. So basically, this was my really simple rendition of an analysis on the S&P 500. I'm just testing the waters to see if you guys know about the S&P 500, if you guys are interested in the S&P 500, and if you guys are interested in stocks at all, because I think it's an important part of my portfolio. And even if I do make big profits in crypto, if I do eventually get a few more wins, like 100K, yeah, I intend to shift that all into the S&P 500 or other stocks or other index funds, I should say, because I think it's important to, like, if you do this, you tie yourself to basically global economics. And by putting it in a safe by putting it in a bank account, it just devalues. And by putting it on these kind of assets, you at the very least beat inflation. So it keeps its value. Not only that, it usually uh, outgrows inflation. So by doing it, you generate money while keeping your money. So, and I think preventing the loss of your funds is the most important part in acquiring wealth. All right, so that was basically my really short video about the S&P 500. Let me know what you guys think. If you have a different vision, if you are buying a different asset or maybe a different index fund for your, let's say, future retirement. Yeah, let me know what you guys think. Feel free to leave a comment, and I'll see you on the next one, guys.